Good morning, everybody, and I hope you're doing absolutely wonderful. So obviously the Fed met yesterday, a lot to talk about, and of course, always feel free to pass this on to social, to customers, and always feel free to give me a call with any questions. The Fed met, they did lower rates yesterday by 0.25%. So again, Fed rates are not mortgage rates, interestingly enough. Same last couple of times when the Fed lowered rates, mortgage rates actually went up a smidge. Rates are still great, generally speaking, high fives for most clients, depending on credit. So Fed lowered rates 0.25%, mortgage rates went up a smidge. We'll see what happens today, tomorrow. Couple of interesting points though. For the first time in 5 or 6 years, there was dissent in the room when it comes to lowering the Fed rate. Some folks did not want to lower rates. Some folks wanted to lower rates more. So, that's the first time in 5 or 6 years that there hasn't been a unanimous decision on, hey, we should lower rates. So that's just interesting to note. Secondly, what's also interesting is because of the government shutdown, normally Fed rates being lowered, that's going to be tied to job data, that's going to be tied to inflation data. The government's closed right now, so the job data and the inflation data is old. They don't have those updated numbers, or at least not with any kind of accuracy because the government is closed. So they made that decision despite the lack of data, which is a little unusual, but it is what it is. In general, what they're saying is we think the economy is on the right track. We think inflation is coming down. So we'll see what happens at the next meeting, and we'll see what happens going forward. Rates are still really, really, really strong. We are seeing buyers get off the fence. It makes sense. If you can get something in the fives, especially FHA, VA right now, those rates are really, really strong. So hope that's helpful. If you have any questions, 404-277-5884. Have a great day.